Okay, so this is my lovely banner. Someone from afar took my picture, not someone from above. So my company is Radcliffe & Newlands, independent mortgage brokers. Because I'm an investor myself, I like to feel that that sort of gives me an advantage to give you an idea of what's going on in the mortgage market. So today, I was going to give you a bit of an update on what's going on in the world of HMO mortgages, because HMOs are a really hot topic. Seems to be the buzzword for about the last couple of years, really. That's the strategy that everyone's following. But mortgages are not that straightforward when it comes to HMOs. Normally, when someone comes to me for some advice, how do they finance their HMO? I say, to be honest, there is no one size fits all. There's no one lender that's really good at HMOs. Basically, it revolves a lot around the property. So certain things that I'm going to need to know: how many bedrooms has it got, how many floors is it on, is it currently set up as an HMO or not, is it licensable or not, what type of tenants are they going to be, is it self-contained flats within a unit. You know, it's really the property that actually decides which lender is going to be best for the HMO. With that in mind though, I'm going to give you some examples of the lenders that are currently lending on the HMOs and what their sort of rules are. I've created myself a crib sheet in case I forget some. So the first lender, which I would consider to be probably my first go-to lender if it's an up and running HMO. So it's licensed, it's got hardwired smoke alarms, that sort of thing. So that would be Paragon. Paragon are really geared up for the specialist type of properties out there, such as HMOs. A couple of things to be aware: they'll go up to 75% loan to value, they've got some good rates. You need to be an experienced landlord. Definition of an experienced landlord is that you need to have been a landlord for at least 3 years. Now verify that by looking at tax returns for the properties that you've actually owned for that period of time. Good go-to lender, but like I say, it would have to be an up and running HMO. I had a conversation with Paragon once where someone was looking to buy a property and turn it into an HMO. And they said, right, just let them buy it with bridging and then we'll refinance it when they've done it. They want to be involved when it's fully licensed and fully up and running, basically. Next up, you've then got the Mortgage Works. They're a really good go-to lender for a lot of people out there because I don't know whether you remember, but they don't have a minimum income rule for normal buy-to-lets. So they can be good if someone hasn't got the standard 25k income that they actually need. So the Mortgage Works will do an HMO, but at maximum loan to value is 65%. 9 lettable rooms is the maximum, so it wouldn't work if it's got 15 bedrooms. They've got some quirky rules there. They're a good go-to lender. You don't have to have been a landlord for 3 years with them, you only have to have been a landlord for 6 months with them, so that's where they can be quite useful, but a lower loan to value at 65%. You've then got Kent Alliance. They're sort of what I would call a niche lender. They're the lender that advertises that they do 85% loan to value buy-to-lets. They don't do 85% loan to value buy-to-let, by the way, because, well, I've never known anyone to have one agreed. You always apply for it and they always knock you back to 75%, and then you're like, well, I should have just gone for 75% in the first place and I'd have got an even better rate. But they must be doing it, otherwise they wouldn't even bother. So they're okay. Minimum price is $250 on those, and again, maximum beds is 8, and there's got to be all the different consents in place. And you've got Leeds Building Society, and Leeds are a weird one. Now, I've heard on the grapevine that they've stopped doing HMOs, but I haven't had that confirmed by Leeds, so I don't think that's true. Leeds are a weird one.
I'm just getting on with it.
I heard it via, someone told me they heard another broker saying it at another meeting. And I've spoken to Leeds and they couldn't confirm that, so I don't know whether there was a bit of scaremongering or a bit of sensationalising or what they were doing. But I've used them in the past for HMOs and they're really good. Maximum 5 beds. The good thing about them is that they will give you an interest rate that's as good as any high street buy-to-let, so 3.5%, something like that, whereas most HMO rates are more like 5%. So Leeds can be good, a bit tricky to deal with, but a good lender. A couple of others just to mention before I finish up. Shawbrook, they're a specialist finance company, sort of almost commercial, but sort of somewhere in between. Again, really like HMOs, but their rates are higher than others, and their setup fees are higher than others, but again, a good flexible lender. Birmingham Midshires, they're okay if it's not more than 5 beds and all of the tenants are on one tenancy. Now, that's pretty rare with a HMO. You often have an individual tenancy for each individual room. If they are all under one tenancy, BM an option. And then finally, Woolwich. If the property isn't licensable, so it doesn't require a license, then Woolwich will look at it. If it's a property that's going to require an HMO license, Woolwich are no good. But if it doesn't require a license, then Woolwich is an option. So it's a bit of a minefield, the whole HMO side of things. I will never say to you, right, go away and think Paragon is the best lender to go to, because it totally will end up depending on the property that you end up finding and all those bits of sort of criteria that I mentioned. So, any questions about any of the different types of buy-to-let mortgage? Arsh has one at the back.
Scott, this week, actually, a lot of people have been asking me about best product for a HMO. As you know, there's not a best product.
Yeah.
But the one thing that everyone is asking me is which product will allow them to out all their money. Is there such a product?
Okay, so there is a myth going around the world that if someone buys an HMO property, let's say they buy it for 200, that you can then refinance to commercial, pull out all your money and then some. It doesn't actually work quite like that in the real world. Yes, if you're getting a good bargain and you get a bit of an uplift because you've added value, but the commercial lender are pretty savvy. They want to see that there's some skin left in the game, that you've still left some money in there, because they feel if you've got their money left in there, you're not going to be worried as much as if you've got your own actual money in there. So the answer to your question is, there's ways to do it, but it's not quite as easy as people think. And it does depend on getting a bargain in the first place. Or a good
But they're working on a rent multiplier.
Well, they are, but they'll also take into account the price you paid and the value of other properties. Because at the end of the day, if you're not paying the mortgage and they have to take possession of it, they're going to have to still sell it, and it's quite hard to sell it as a business. So they might have to just sell it on its bricks and mortar value. So that's the bottom line risk that they'll look at. I've got no more time for questions. Hitesh, you'll have to talk to me in the break. That was my mortgage update. Round of applause, please.